right, now let's see if we have Gbemi now. Gbemi, I was trying to get you earlier, but you couldn't hear me. Can you hear me now?
Yes, I can hear you.
Great to have you. Good to have you, Gbemi. So, this conversation about, Nigeria's debt level and a debt to revenue ratio and, not getting in, all that dollars or foreign exchange, we need, at this time. What do you think are the options here for Nigeria?
So we have to think about, I guess, how we got here in the first place. At the moment, Nigeria's debt servicing to revenue ratio, like you said, is higher than 100%. And that's because, first, we're not earning enough. Crude oil, which is the chief contributor of foreign exchange to Nigeria, crude oil prices declined in 2016 and 2020, and that just caused, a decline in our revenue, especially foreign exchange. So we also, were borrowing a lot, and we were not, cutting down our expenses, and that's what has brought us to where we are today. So I guess now that we're here, if we were to borrow some more, we have options. We could still, if we wanted to maintain our debt servicing, we could still borrow. We could request for a restructuring of the debt that currently exists. And then we could also try to, ramp up our revenue some more, foreign exchange revenue, either through exports or investments or just, I guess, more borrowing. All these are expensive, especially if you want them to happen in the short term, but they're not impossible.
And, talking about cutting expenses, at this point, that's the federal government. Where can we look at, talking about cutting expenses?
So one thing that we haven't done in the longest time is Nigeria has failed to realize that we can no longer subsidize a lot of the energy and power and petrol that we've been subsidizing for the longest time. Nigeria cannot sustain it anymore. So if we were to cut down expenses, that would be the first place to. And the best time to do it would have been, in pre-2016, before oil prices crashed, or after 2016, between 2016 and 2020. Now it's going to be a lot harder to have that conversation, but the government can no longer sustain the subsidies. So that would be the first thing. Also, we have seen calls for the government to reduce the public service, let people make the public service more productive and more efficient, so cut down on personnel costs, which takes up a significant chunk of the government's recurring expenditure. We also need to look at I guess, looking for ways to reduce excesses. It's not time to buy cars and buy flashy homes for anybody. Nigeria cannot afford it anymore. So it's actually time to. Those are the areas that we can look, those are the low-hanging fruits that we can look to reduce our expenses.
Yeah, because I saw recently the Kenyan parliament, they, stopped, there was a proposal to stop buying cars for members of parliament, that they can buy the cars, by themselves if they want to. I guess that's one angle we can also look at. But, it's a tough place now for most emerging economies. We've seen, currencies actually lose value at this time with the strengthening dollar. But I'm thinking for emerging economies like Nigeria, what do you think we can do, at this point from a currency angle, to help with this dollar shortage?
The reason why we have a situation, a currency crisis at the moment, is because we have a managed float system. So the central bank, tries to maintain the exchange rates, the official rates at least, at a certain level, and uses the foreign exchange reserves to sort of back that up. That's no longer sustainable because we're not earning enough. So last week or 2 weeks ago, when the CBN summoned, the Senate summoned the CBN governor to, ask for a reason for the exchange rate crisis. And according to CBN governor, the reason was that the NNPC was no longer remitting forex to CBN. And I mean, you've seen, although the NNPC came out to say that they had remitted 2.7 billion, by the time you weigh that against the income from the NNPC in previous years, prior to 2015, the NNPC was remitting about 3 billion or more per month. And now the NNPC is remitting 2.7 billion in 6 months. That's quite alarming. So that's why we're here today. If we're to then decide to sort of restructure or, we can, all that's to say that we can no longer maintain the exchange rates at a certain level. To maintain the exchange rates, you need to either have like a super buoyant foreign exchange reserve that you can sort of use to plug in supply when demand is high. We don't have that. So it's time to actually let the exchange rate go. And what that does is it gives foreign investors confidence in the economy to a large extent. So investors do not want to come in today and hear that, exchange rate is 410 today, tomorrow they have to buy from the black market, the day after. It causes some inconsistencies and it distorts planning. But if the government, if investors come in and they know that, the exchange rate is market reflective, is reflective of demand and supply, they'll be able to make decisions, and that would, and that would also inform how liquidity would be and all that. So I think that it's time for the central bank to loosen its grip on the exchange rates, because, it can no longer maintain it.
And at this time, what type of borrowing do you think, if we're still going to keep borrowing, where should we be looking? Should we still be looking at the external, or should we look at more borrowing down here locally?
First, I don't think we should be borrowing as much as we should. As much as we currently are, Nigeria's external debt has increased by 3x. We tripled our debt in just 6 years. It's so alarming. The last time this happened was I don't even think we've done it at this speed in a very long time. In 2004, when we needed like a debt servicing or debt forgiveness, we were owing over $30 billion, and that was cumulative. That was from like 1985. So our debt multiplied by 4x between 1985 and 2004. This time, between 2016 or 2015 and now, our debt has tripled. So first, we need to pull the brakes on the borrowing. And I know that sounds more easier said than done, but it's important now that's why we're talking about the government sort of reducing its expenses. But if we were to continue borrowing, we have options. We have the multilateral organizations. To borrow from them would require, implementing some stringent austerity measures. IMF would not give you money without you putting your house in order, putting your fiscal situation in order. We also have the capital market. That's also quite expensive. The federal government has tried to issue Euro bonds this year, and they've seen repeatedly that price at which the interest rates that the market is requesting for these Euro bonds are quite high. And that's because investors do not believe in the Nigerian economy as much as they used to. So if they're going to borrow from the capital market, we need to be ready for, we can do long-term bonds that would come at higher than usual interest rates, but we need to be ready to pay. That means that our debt servicing will continue to increase if we decide to go that route. If we're to borrow from CBN like we're already doing, I do not subscribe to that. It will just continue to bloat. It will continue to make inflation higher. We're seeing the CBN, and it just questions the independence of the CBN. The CBN cannot continue to give money to the federal government to manage its budget deficits. And even at that, if you're borrowing from the CBN, you're not borrowing. It depletes if the CBN is lending at the domestic. If the CBN is lending in Naira, it causes inflation. If they're lending in dollars, it depletes our foreign reserves, reduces money for debt servicing, reduces money for imports. There's just so much. Right now, we don't have enough room. But thankfully, multilateral organizations would always come to our aid. Like if anything happens, they're always happy to help countries that are struggling with debt. But if they're going to come to our aid, we need to be ready to unify our exchange rates, to remove petrol subsidies, to cut the civil service, to make all these stringent measures that would impact the Nigerians like you and me significantly.
And it's quite interesting. We saw that headline that each Nigerian owes about 200,000 naira if you split it, between people. But at the end of the day, this is a pre-election year. There's a new government that's going to come in, next year, and this debt issue would still, be hanging, over our heads at that point. But what do you think are the options for a new government?
So what the new government needs to understand first is how we got here. I earlier mentioned that we're not earning enough. We were not cutting down on our spending. We're borrowing too much. So first thing the government needs to understand is it's important to bring in foreign exchange. Foreign exchange needs to come in either through investments, through exports, through remittances. These are sources that would not deplete or impact Nigeria negatively. Investment at the moment is difficult because we've seen, with developed countries taking contractionary monetary policy measures to reduce inflation across the world. People are more willing to give their money to a US or the UK than Nigeria. I mean, so we've witnessed this capital flight. We witnessed it in 2016, also saw it in 2020. So it's important, like the government coming in needs to make Nigeria look like the best place to invest. And that involves putting things like security, power, and some other significant issues that make production and make business in Nigeria expensive. They need to put those things in order. So those are the first things that you need to do. Ensure that try to make Nigeria an investment destination, either by inviting people, by, taking advantage of the different free trade zones that we have across the country. We also need to export. Right now, we were saying how, we are seeing how Europe is looking for alternative sources for gas imports and things like that because, the sanctions on Russia is preventing them from getting as much as they usually would. So this is the time for a country like Nigeria to sort of plug in. Like now is the time to, look attractive for exports, and not just exports of like raw materials, but looking to export things that are actually required. Things like even palm, right? Indonesia at some point had paused palm exports. They resumed again. But then these are the different areas that, we should be plugging in. And what that means is if we're going to export, our port situation needs to be sorted. It's at the moment, exporting goods out of Nigeria is quite burdensome. Like it's a lot of stress to actually try to sell your goods out of Nigeria. So port issues need to be sorted. There needs to be a seamless flow of goods out of the country. So we need to also sort that out. Remittances have declined because another thing about, seamless flow of funds into the country and out of the country, we've seen people prefer P2P measures of sending funds home instead of the actual official channels. We need those funds to come in through the official channels so that the government can make use of it and so that CBN can have access to it. Without that, we won't be able to. So we still have options. The new government coming in still has options to, make Nigeria the best investment destination, maybe in Africa,
right.
Encourage exports by easing the flow of easing the bottlenecks at the ports and even unlocking. I think the NPA has done a good job in unlocking other, I'll call them moribund ports across the country in Calabar, in Warri, in I think Cross River and Rivers. So now is the time to sort of take advantage of those ports, make Nigeria's make the flow of trade of goods and services out of Nigeria easy, and then just make remittances easier to.
Quite a lot of work. Quite a lot of work there, seeing for the new government, to do. But
Olani, I can't hear you anymore.
Can you hear me now? How about now? Okay, I guess, okay, maybe can't hear me anymore. All right, Gbemi, I'll talk to you another time. We'll try and get Gbemi again.